We're live. Welcome everyone to the live stream today. Let us know once again. Let us know where you are tuning in from. What time is it for you? And Brad, where are you from? Well, sorry, where are you based now?
Hey, Larry. Thanks for having me. I'm currently in London, so it's 1 in the afternoon here. If you're on the other side of the pond, good morning. If you're in Asia, good evening. Pretty awesome to be with a global audience today. So yeah, excited to be here.
Awesome. So it's London is right now. It's 1 o'clock.
Yep.
Okay. Yeah. So it's 9 o'clock for me. For those that have been tuning in, no, I'm from Taiwan, so it's UTC +8. So, are we getting any comments? I think the comment section is a bit buggy. I'm not able to see the comments here. But yeah, no worries. We'll move on to the AMA anyways. So backstage, if you could help out to see check if the comments are working.
I see them coming in, Larry. Someone said that they got their popcorn ready. Someone's coming in from Cameroon.
No, those are from YouTube. So we welcome the YouTube audience. We are also streaming. So for this AMA, we're streaming on YouTube. We're streaming on Binance Live also. So feel free if you want to participate in. We do have a giveaway today. If you want to participate in the giveaways, feel free to log into Binance Live, where you can participate in the giveaway. So yeah, hi everyone. I'm Larry from the Binance Earn team. So Binance Simple Earn team, easy way to earn additional assets on your yields, on your assets, additional assets on additional rewards from your yields, from your assets. Sorry about that. And then Brad, do you want to give a quick intro for yourself?
Sure. Hey everybody. My name is Brad Harrison. I head up the team at Venus Labs. We maintain and support and grow the Venus protocol. Venus is the #1 lending protocol in all of DeFi, meaning that we do the most loans, we have the most transactions. And what is a lending protocol anyway? So a lending protocol is basically a marketplace where you can supply assets and use them as collateral for pulling out loans. And of course, loans, that's the very essence of finance. That's why crypto is here, right? If we trace our roots of how this all started back to 2008, when Satoshi created the Bitcoin white paper, his inspiration was a financial meltdown, right? It's because there were really bad securities that were wrapped into other securities that represented loans on mortgages. And so he said there wasn't enough transparency here. And of course, the rest is history. Here we are streaming to tens of thousands of people talking about crypto. And for me, working on a lending and borrow project in DeFi is really what crypto is about. It's really what Satoshi intended crypto to be about. Of course, for so many of us and for so many people, crypto might be about NFTs, which NFT project is hot. It might be about which new coin is hot. It's driven a lot about speculation, right? But for me, crypto is about financial services. That's what Satoshi had in mind. He wanted to usher in a new decentralized way of doing financial services. Bitcoin was just the first step, just payments, right? Just transacting and being able to have a store of value. But really, the promise of crypto is so much more than that. And borrowing and lending has just really been born in crypto. So, if we look at the history of lending and borrowing, these protocols came around, 5 years ago. And 3 years after that, they started getting noticed. So I say that DeFi is in its terrible twos. It's just, it's just getting up and standing and learning how to walk. And the growth has been incredible, really. It goes to show that Satoshi was right, that doing finance with blockchains and tokenized assets, there's something good for that. There's something to that has value, right? And the result has been that we went from $10 billion in liquidity a couple years ago to like 200 billion. It's pretty incredible. And you'll probably hear me say this again at some point in the hour, but that's nothing compared to the amount of adoption that we're going to see in the future. So I'm tremendously excited to be here. If you're not sure why you need lending or borrowing in DeFi, hopefully after this hour is done, we'll all know the answer. And I'm excited to dive in. So thanks, Larry, for having me. Thanks to Binance. And yeah, let's rock and roll.
Awesome. Thanks so much for the background. So yeah, I haven't introduced your title yet. So we're super excited to have Brad Harrison, CEO of Venus Labs, on our AMA today. So like Brad already has gave us a very thorough background on the crypto, on lending and borrowing. I'm sure like lending and borrowing is one of like the more fundamental forms of finance, right? Starting with Bitcoin as the payment or like the medium of exchange, and then moving on to the lending, and then moving on to even more complex financial instruments. But of course, like there's always steps there, and Venus is here to solve that problem. So so before we jump into it, and again, so I'll quickly go over some of the rules for the AMA. As some of you already know, we do have a giveaway. Venus is sponsoring $5,000 worth of XVS for all of the viewers today, for all the live viewers today. So before this AMA went live, we did send out a survey on Binance Twitter, on Binance Facebook, and on Binance Instagram. So for those that have been following those channels, you'll be able to send out, you'll be able to fill in the survey, fill in your questions, and we do have a lot of very good quality questions from our fans that we'll be addressing today. And for those, I see some of you are already starting to post questions in the comments. Once again, if you post quality comments or chat or questions in the comments, we do have some backstage helpers that will help us choose the questions that we'll answer along the way of the AMA. So do keep them coming. So yeah, back to you, Brad. So could you give us a bit of background on why you're doing this, a personal background on your personal professional background, and what you gave us some sort of like a history of finance, but could we get to know a bit more about you?
Sure. So my background is in digital product management, and I was really fascinated with the disruptive innovation that came along with building applications on the internet since the beginning of Web 2.0, which was already like 15 years ago. It's like, that's when Facebook first launched its API. That's when we were starting to connect things together on the web. And we the web went from static web pages to apps, right? And we've come so far since then, but it's also created problems, right? And we've had to hand over custody of assets and identity to people that, time has shown we can't really trust. And so it's time for the people to take that back. And I think that's what the Web3 movement is about. And I got really interested in this. Starting in 2013, a friend of mine told me that there was a Bitcoin hackathon. I was living in Miami at the time. And he said, Brad, we got to get involved in this, man. Bitcoin, it's the future. I'm like, what are you talking about? So we ended up going to the hackathon, and I saw all of like the excitement that was going around Bitcoin. And it wasn't really until 2017, I was working at a big bank that I caught awareness of the ICO wave, and I saw like that, this community of Bitcoin had really exploded into a much bigger community because of Ethereum that said, hey, let's take this technology and build apps on top of that. And so when my boss at this big bank asked me if I own crypto, and I said no, he was like shocked. I knew like I really have to start looking to this more seriously. So 2017, I went all in. I left my corporate life at a big bank, and I said, I want to be a part of this movement. This is the future. Let's make it the present. And so that's how I ended up here.
Wow. So yeah, very typical OG, crypto OG, going all in, whether in like the 2017 and the 2021. Definitely, I guess we've all learned a lot of lessons within the ups and downs, and yeah, I guess a lot of the people here in Binance, but you and Venus, we do want to make changes to the world, whether in terms of like the finance industry or bring impact through crypto. But yeah, so could you give like a high level overview on what is Venus protocol before we go into the pre-collected questions?
Sure. So Venus as a lending and borrow protocol means that it's basically a marketplace that brings together people that want to lend assets and people that want to borrow them. Oftentimes those can be the same people, but essentially you're going to Venus and you can supply your assets for yield. It's a place that you can offer your assets and earn yield on them. There's about 20 some odd markets that you can do that with on Venus. And at the same time, you can collateralize it. So if you want to take out a loan, you can collateralize the assets that you've supplied, and then you can basically lever up. So you can add leverage and you can increase your exposure on that given asset by basically borrowing more of it. Or what is really useful for people is, say they want to basically hold on to their Bitcoin and participate in a Binance Launchpad, right? I'm sure lots of people here know what Launchpad is. It's an incredible platform where you can get projects funded with the help of Binance. And if you don't want to sell your Bitcoin, you just want to get BNB and have to avoid the costs that come along with letting go of that Bitcoin, like slippage and transaction fees, and all of the costs that go along with swapping and changing your assets. All you have to do is supply your Bitcoin on Venus, use that as collateral, and you can borrow BNB. And so that's also a great way that you can use the power of borrow on Venus. But this is really just the beginning. I think, as we'll probably explore together, Larry, today during our AMA, we're just really scratching the surface of what lending and borrowing can do in crypto. Because we've been here only 2 years, we're just really at the beginning, right? You can think of other like incredible startups and companies that have taken amazing journeys, right? Whether it's like SpaceX or Apple to the iPhone or what have you, Tesla. Their journeys to realize mainstream adoption were years in the making. And so it's really exciting knowing that we've made so much progress, and yet there's still so much more to do. So I hope everybody will get excited about decentralized lend and borrow today, and join us on the journey.
Yeah, so I think thanks for the overview of Venus. So it's essentially like a lending protocol on the blockchain, where traditionally, I think if we make a comparison, traditionally, if we want to get lending, we go to a bank. If we want to lend on our assets as collateral, we go to a bank, we collateralize our assets, and then we get to lend the money. However, I guess there are some use cases in crypto where a lot of our viewers, they hold a lot of crypto, but they cannot obviously use their crypto as collateral, right? So if they want to buy something, or if they want to make use of collateralize their assets on tokens that they have belief in, but they still need that liquidity, they still need money, they can utilize Venus in this use case and get crypto loans from through a decentralized way and without a middleman. And you also mentioned a great example. So just recently, we've also launched the Launchpad, Binance Launchpad, the Hook Protocol Launchpad. So a lot of the users, they have to. So the rules there is that users, in order to get quota for the Launchpad, you have to have BNB there will be a snapshot, and according to the BNB holdings during this time, you will get different quotas. So I did realize, I did find that during these times, the BNB lending rate skyrocketed during this time. Do you want to give some context on the use cases there? How users like use Venus, and like what sort of like the common use cases that you see?
Yeah, I mean, the Launchpad event is just like that, our utilization, or in other words, how many people were borrowing and how much borrowed activity there was going on during the launchpad just validates that use case, right? People get really excited about launchpads. It's just such a massive vehicle for getting a new project out there. And I think as time goes on, more and more people will, go to Venus to help them participate because, while there are tons of BNB holders, there's no denying that. There's also people that want to increase their exposure on BNB during a launchpad event. They'll come to Venus with their collateralized BTC, their collateralized ETH, or 20 other assets, whether it's BUSD. Maybe a lot of people are in stables right now because of market conditions, right? So with their stables deposited on Venus, they're earning that yield. Then they collateralize it, and they'll take out a BNB loan just for the time that they need it on the launchpad. So we definitely see like a very consistent jump in activity as launchpads come around. And maybe there's an opportunity here to help people use Venus more easily with launchpads. I'm sure Binance will want to take a look at that and see if it can help them basically move the outcomes of launchpads ahead more, get more people involved, make it more successful. But that's definitely one of the primary use cases. People also use it because if they're speculators, they may want to kind of take a short position. So they're betting that some asset will go down in value. And then with that, they're depositing a stable, they're borrowing that asset. And when the asset goes down in value, they're basically, so does their debt, right? So they have to pay back less. So if you're a trader and you want access to decentralized kind of margin, Venus is a place to do that as well. So those are probably, two of like the really big use cases, along with increasing your exposure on a given coin. But since we're in the terrible twos, like I said, we're probably going to see, we're definitely going to see a lot more use cases come online for lending and borrow in the coming years. So we'll get into that. I'm sure, Larry, we've got another 40 minutes or so to plow through. So looking forward to talking more about that.
Awesome. Yeah, so I guess the first question, and congratulations to this user. What are your strengths compared to other DeFi programs? I guess the other DeFi lending protocols. You mentioned on the site, Venus is a fork of Compound. I guess if you could do like a quick comparison on the DeFi protocols that are currently out there, even on different blockchains, and what do you think are the strengths of Venus, whether it's on BSC or Venus as a protocol compared with other protocols that are similar?
Yeah, so there are like a few other key protocols that have been important because they've really helped us to innovate DeFi, right? So they were the firsts, and they made a big name for themselves. But what's really amazing about working in Web3 is that everything is open source. And so the reason why open source software even became a thing is because developers wanted innovation to go faster. So if you share what you're doing, more people can contribute to it. And so essentially that's what we've done. We've taken things that were tried and true, and we use the open source code, and we have basically made it better, one, by bringing it to a new market. So by bringing Venus to BNB chain or launching it on BNB chain, we've been able to establish one of the largest communities in crypto. So that's definitely a strength. But I'll start with, before I get into that one, I'll start with saying that probably one of our key strengths is this Venus Prime program, which is one of the most important developments for me in DeFi. Why is that? Well, in DeFi, projects have been fueling growth with token emissions, which is a fancy term for basically giving tokens away to attract users, attract liquidity, attract business. The problem is that emissions are not sustainable, which is why a lot of tokenomics get called Ponzinomics. So you run out of emissions, and then you have to print more if you want to give away more, right? You have to print more coin. which is basically what the central banks do. They just print more and more money. And what happens is that creates inflation. And inflation, of course, famous economist said, is a hidden way of taxation. So we all know that inflation is bad. And that's why people in crypto often look for deflationary tokenomics, not inflationary. But yeah, so back to the Ponzinomics. What happens is that you're with the emissions, you're trying to drive the value of your yield APYs, so how much you're giving to people to supply their crypto, and subsidizing the cost of the loans, so making them cheaper. So, but what happens is that when the token emissions run out, these protocols become way less competitive. So essentially, you're only temporarily boosting the attractiveness of the protocol. And in the process, you're often devaluing the token you're using to do it. So how do we solve this problem? Well, we use the XVS token to do that. And I think, for us, we took inspiration from BNB, which, of course, has been one of the most successful coins in all of crypto. Why? Well, aside from the fact that CZ and his team are incredible entrepreneurs, BNB was put at the center of the business model with its trading fees. So that worked extremely well. And that's what's created a lot of excitement in the coin. People said, oh, there's a business model here, right? So with XVS, we've basically followed the same playbook. We use XVS so that when you stake it, you have like a proof of membership in the community. And then only those people will get boosted yield or subsidized loans. So it's like being part of a loyalty rewards program. So like BNB for Binance, we put this token at the center of our growing protocol. And the result is that there's way more emissions for power users rather than just anyone who's coming along and passing by. So it's far more efficient. And that's why you see so much XVS being taken out of circulation. I think now it's like 50% of the token supply is staked in our XVS vault, which is pretty remarkable. So in DeFi, we call this kind of program real yield. It's like the opposite of Ponzinomics. So instead of renting liquidity or attracting people by printing coin, you're generating it through the value that the protocol is creating, the revenue the protocol is creating. And so I think this is one of the most important developments of our industry. It's a response to everything that's been going on in DeFi over the past year. And in general, you want to make sure that you're paying attention to projects that are using real yield. And that's what Venus is going to be doing. So that's kind of our key strength. And then I would add one more strength is, as a DAO, we're a community-driven project. We're only as strong as our community. So I'm proud to say that amongst all those other players, we have the largest, most diverse community probably in all of DeFi. And that's what really drives growth, because word of mouth is extremely powerful. People are always talking to one another about things they're interested in. For example, we did a community survey a year ago, and we just did another one last week. And what's amazing is that we had more people participate in this one than the one a year ago. So we know we're growing. We're growing with tons of headwinds out there in the current market, which is also remarkable. And so people from all over the world contribute to the future of Venus by steering the roadmap through surveys like this. And on top of that, we have tons of real world in real life events. We did like 50 of them through the Venus community this year. So wherever you are, chances are that there's a community to talk about the future of finance and to talk about DeFi with one another. So I would say those are the two key strengths of Venus.
Yeah, thanks so much. I think, we definitely want to dive deeper into both of these as we go along. So I guess that also leads to the one of the questions that I think you already touched on. So Brandon also asked, like, if we could dive more deeper. So a quick recap on the last question is that the main strengths of Venus as a lending protocol, first of all, is its introduction of XVS, the tokens, whereas a lot of the lending protocols, and correct me if I'm wrong, a lot of the lending protocols, their tokens or their sort of incentive structure is based on emissions, right? Just like printing money, sort of. And once it's all printed, it's more like short term. And once it's all printed, there's sort of no more value left in the system, and then people just come and go. Whereas Venus, you mentioned that there's 50% that has been staked in Venus, the Venus Vault. So that's also something that we can dive into. So yeah, if I'm not sure if the audience has already asked questions related to this, but yes, I guess that's something that we definitely want to know more about. But then holders or stakers of this Venus Vault would be able to share sort of rev share or get yields based on how the protocol is doing. So sort of like the incentives are aligned there, right? So the tokens work in terms of like the protocol, the token mechanics, in terms of like the mechanics of the tokens is very important in these lending and borrowing protocols. And then the second part is the community, where you have a DAO, where this DAO or the community is driving the protocol forwards. And I know there's like a lot of new proposals going forward. And yeah, we definitely want to also know more about the different events that you're doing. But maybe we could touch on this question. So thanks for the question, Brandon. And congrats, you will be receiving $25 worth of XVS. So one quick break. So the rewards for all of the rewards for this AMA will be distributed as locked trial funds. So for example, $25 worth of XVS in 1 month's time, or within 30 days, for those that are logged into Binance Live, we have your UID, and so we will record that. And you will receive in the rewards distribution, you will see a locked trial fund with $25 worth of XVS, and then you'll be able to redeem that. And if you redeem that, you can go to the Simple Earn page and redeem the XVS token locked trial fund reward. And then once the locked trial fund expires, you'll receive the full $25 worth of XVS tokens. So that's how it's going to work. Yeah, so regarding the rewards, there are no crypto boxes. It will all be distributed in locked trial funds. You will definitely receive the full $25 worth of XPS, but it will be in the form of locked trial funds. All right. So jumping back to the question. So in terms of like the tokenomics or like the XPS token, could you tell us a bit more about how it works?
Yeah. So tokenomics, of course, is the kind of heart of the business behind a protocol, right? And the tokenomics is based on how do the revenues of the protocol get distributed. So the revenue is based on actually the same business model as a bank. Banks charge a certain amount for loans, and they pay out a certain amount for deposits. And so for them, they're making a margin there, which is called the spread, right? Between how much it costs to borrow and how much they're paying for that liquidity. Venus is the same. There's a spread between the APY of the supply and the borrow. And the protocol takes the difference and allocates it to a few pretty important baskets. So one basket is for the XVS stakers, as you mentioned. That's really important because these are the people that are growing the community, and you want to make sure that they have skin in the game. And so they basically have access to that by staking in the vault. So the XVS vault is like this powerhouse that as the protocol grows, so does the value of this vault. Another important part of the tokenomics is this risk fund. It's like an insurance fund. So anytime something happens on the protocol, which a couple of things have happened, just like in a bank, banks have defaults, right? So this risk fund kicks in and is basically there as a backstop, so that if liquidity is needed to provide relief or cover some insolvency, it's there. And so 40% of the revenue goes to that because it's so important in DeFi to have really solid risk management, right? And so those are like really two key parts of the tokenomics. Another one is fueling these prime emissions. I think that's like 20%. And so that's a really big part of it because we want the prime program to grow and to have a solid value behind it. And so that's another one that goes to funding a really important initiative that we talked about. That's the real yield. Where does that come from? Well, that's where it comes from. It comes from the 20% of the tokenomics. And then there's another 20% that's for operating the DAO. So the DAO has people in it that need to go out and grow the team or grow the community, bring in auditors, right? And so that's pretty much an overview of the tokenomics. What we try to do in the last one is make sure that the people that are contributing to the value of the protocol, which mostly is the XVS stakers, are getting rewarded, not just through the vault, but also through the prime yield. And so this is one of the most forward-looking, innovative tokenomics, if not the most in DeFi, I would say. And so I'm really happy that the community adopted this latest change to the tokenomics just a couple months ago. So that's how it works.
So quick question on, you mentioned the Prime program, 20% to the Prime program. Could you explain a bit more on that?
Yeah, so the Prime program is this one that I was explaining solves the problem of Ponzi-nomics, right? Because rather than having to print new coin to attract people into the protocol by subsidizing the supply APY or subsidizing the loans, we're basically only sharing those boosts with the people that are in the community, that are XVS holders and that have staked in the vault. That way, we're not just giving it away to anybody, right? It's like you have to be a valued part of the community. You have to have this like proof of membership, which I think is good, because even like, banks don't just give rewards, or American Express doesn't give rewards to just anybody, right? You have to be a member. It's a membership fee. And so this is kind of replicating that.
Got it. And that's different from the allocation to the vault, right? The Venus vault, or is that the same thing?
On top of it.
Okay. So there's a certain allocation to people, stakers to the Venus vault, where they can get additional Venus XVS tokens. And then on top of that, there's a Prime program where it's more of like a membership, where these members, they get additional rewards or additional incentives for participating in the network.
Yeah.
Awesome. So
yeah,
sorry, go ahead.
I was just gonna say, because we've really tried to take every measure so that there's adequate ROI for people to participate in the program, right? So, you asked a great question. You nailed it. How does this relate to the vault? Well, you get it on top of the vault. You get if you're in the Prime program, if you're a member because you staked enough XVS, you get the yield, extra yield on the markets. You get the subsidized borrow, and you get the XVS subsidized. You get the XVS yield in the vault. So it's like it's a trifecta. It's the tokenomics trifecta, I would say, of DeFi. So
what's that? The tokenomics trifecta?
Yeah, because you're getting the value back in three ways: subsidy on the yield, boosted yield, subsidy on the loans, and vault yield as well.
Okay, got it. Yeah. Next question. I guess you already touched on tokenomics. So Web also asked the Venus token. Could you shed a bit of light on like the tokenomics? A bit more light on. You mentioned like it's there's a fixed amount, and it's not inflationary, right? And then the emissions or the rewards actually come from the vault or the Prime program. So it's not just printing tokens. But are there additional mechanisms? I guess some of the tokens have burning, some of the tokens have other, I guess more layer ones have burning, but I guess if you could shed a bit more light on the tokenomics here.
Yeah, I think so. Venus used to have a buyback and burn program. So now there's buyback, but burn might make sense for layer ones, but we said to ourselves, we don't really see the ROI of burn. The protocol went through so much effort to distribute a token. It seemed kind of counterintuitive that suddenly we're just going to, do the opposite of that and burn it, right? So we said, instead of burning, let's just find more efficient ways to align the incentives for the community and the protocol and allocate that value. And I think that's what we achieved with the Prime program, so that we don't have to burn, which seems like, an inefficient use of those tokens. But now we're giving it to the people that are contributing to this flywheel of growing the protocol and seeing that yield back because they're part of the community, they're power users, and they've staked in the vault.
Awesome. So next question, user 52B5E. What are the advantages of borrowing in crypto compared to bank? I guess this is more of a crypto newbie. Maybe there's a comparison there, but I think we already had a great use case at the start, right? So you cannot collateralize your crypto in a bank. Like, right? I don't think so. Right now, you cannot collateralize your crypto for loans. But yeah, if you could share other examples.
Yeah, that's such a good question. I mean, why are we doing this after all on blockchain? And probably one of the biggest advantages is that if you want a loan in a bank, it's going to include weeks of paperwork. It's going to include many teams, one of which will evaluate your income based off of PDFs, right? To evaluate your credit worthiness. The process is slow. It's expensive. It's vulnerable to fraud. I don't think anybody enjoys the process of getting a mortgage, for example. For those of us that have done it, if you can even get a mortgage, if you can even have access to that. In DeFi, you get a loan in seconds. And if that's not disruptive technology, I don't know what is, right? I mean, it's pretty amazing that we have brought about a system used by tens of thousands of people across billions of dollars in assets that are accessing leverage in seconds, right? And so the point I would just want to drive home is like, this is really just the beginning of that. But that's one advantage, is that it's much faster. There are many other advantages. So one is that you're dealing with verified on-chain assets. So you can see everything that's being done. It's completely transparent. It's enforced by code, so everybody knows the rules of the game, instead of a bank where it's a black box, right? And fingers crossed, you get the outcome that you want. So it should be a lot more predictable for people. It should be a lot more aligned with the fact that if people want a loan, they know exactly what's involved. And so those are like some of the key advantages for me. I mean, we could go on and on and on, right? But at the end of the day, it's faster, it's more transparent, and it should be easier for people to understand the rules of the game. And that's what makes it such compelling technology.
Awesome. Yeah, so I guess in terms of like, all right, before we move on to the next question, in terms of like, I want to pick your thoughts on, you mentioned this really revolutionizes the way people gets loans, right? Because I can collateralize my digital assets and then get loans in return very fast. But that's based on I can only collateralize digital assets. Regarding like blockchain lending protocols, do you see any time in the future, or I know there are some protocols that are addressing this, but I just wanted to know your thoughts on whether in the future you will see something like being able to collateralize real world assets, real world financial assets, and also getting like a crypto loan on that.
Yeah, I think that's going to be one of the key themes of 2023 in when we talk about DeFi growth. That's going to be a key driver of DeFi growth in 2023, is bringing these real world assets on chain and seeing them collateralized in protocols like Venus. If you look at the data, RWA, as we call it, real world assets, are already coming online really fast. It's being pioneered by a lot of different players. The godfather of DeFi, which is MakerDAO, is leading the way there. And without a doubt, I wouldn't be surprised if Venus makes a lot of progress there too in the near term future. So RWA is definitely going to be a big part of the crypto story, of the DeFi story for the next couple years at least.
Okay, I think that's also a great segue to our next question. So 626, you have asked, what is like the end game or the ultimate vision of how your team envisions Venus to be, whether it's like streamlining the whole process from onboarding RWA assets and then lending up protocols, or like vertical integration or horizontal. So yeah, any thoughts, any views on this?
Yeah, I really like this question because, like I've said a few times already, it's still so early. There's still so much more work to be done. Everyone at Venus in the community, on the teams, are really excited because the ambition, the vision is global in scale. And we're already making a lot of progress in that direction. We're realizing a world where every type of financing for every segment of the market can be robustly and sustainably and transparently powered by Venus. And that's a lot of use cases. So there's a lot of work to do, but in our latest upgrade, which is version 4, we get a bit closer to that. For institutional use cases, for example, in the future, we want to be able to collateralize mortgages, which is what led to the 2008 financial meltdown, because it was done so poorly and with no sight of risk management, no transparency about what was being done, right? So let's fix that for institutions. Let's offer bonds, which is something in the V4 upgrade that was approved by the community just some weeks ago. Intraday liquidity is another use case for institutions. For commercial,
what's that? What's the last one? Sorry.
Intraday liquidity. Yeah.
Intraday. Okay.
Yeah. So giving on-demand liquidity when institutions need it, because we can do it. You can do it in seconds with Venus, right?
Okay.
So for commercial, the commercial segment use cases could be business loans, lines of credit, and all kinds of other debt facilities or commercial paper. And for retail, it's powering completely non-custodial financial services like mortgage, auto loan, putting the next generation through uni with student loans powered by DeFi. I have no doubt that Venus will be doing all of that in the next 5 to 7 years.
Yeah, I mean, you guys already have a lot of new features in your product roadmap, right? So like the integration of DEXs, isolated markets, more price feeds. I guess these are all points that increases it or increases the user experience for users, right? So could you touch a bit on like the near term, like other than long term, are there any near term roadmap goals that you think would greatly be beneficial, or I mean compared with other protocols that you guys are working on?
Yeah, I guess probably the most important milestones that we're working on are fulfilling version 4, which includes this prime yield, includes the prime program, which has been such a important part of the proposal for crypto to solve for the Ponzi-nomics and make protocol growth sustainable. I see you chimed in another question here. Okay, why Venus Protocol version 4 is important? Great.
No, it's just I think you're already addressing this one, so I thought it'd be great to bring it up.
Yeah. So I'm happy to give everybody the breakdown of what version 4 is all about. There's a lot of different pieces, and I already spoke a lot about the Prime program. That's part of it. And the other parts are isolated lending, which basically extends the power of Venus to many other coins. So due to the constraints of doing risk management on an open lend and borrow protocol, we've been restricted to really large cap coins only because they're all in the common pool. It's a cross margin model. You post one collateral, you can borrow with another. So as a way of supporting long tail assets, which crypto is definitely about the long tail, and giving all kinds of communities everywhere the power of launching projects and coins, we've had to add support for isolated markets. So that's what that does. And so inevitably, Venus will be brought to so many more communities all around the globe through this really exciting improvement that's going to get launched in the next month or so. In V4 is also a fix for our beloved stablecoin, which is VAI, VAI, that had the same issue as MakerDAO. So MakerDAO's coin is DAI. It lost its peg. And so this is using a similar solution, which is adding a fee in terms of a fixed rate to blunt the effect of an abundance of supply of the stable coin. So this will get it back on peg, and we want people to have access to stablecoin minting on Venus, which is also important for ushering in all that RWA we talked about, right? And so VAI will be a part of that. And then something that's going to make the user experience a lot easier is this integration of swap. So if you wanted to supply to a market that you don't have the coin for, or you wanted to repay a loan, you'd have to use swap, like Pancake Swap, for example. You'd have to click over there, then you'd have to come back. Now with the swap integration, you'll be able to do it all in one click. So it's going to scan what you have in your wallet, and it'll say, hey, what do you want to supply here? For if you want to go into the Bitcoin market, you can choose any coin to swap into. That's powered right now by Pancake Swap. Plus the protocol will get a portion of those swap fees. So it's a win-win. We're helping increase the value of the protocol. We're improving the user experience, so you can make it a lot easier to go in and out of markets and borrow and repay. That's one that the community has been asking for a long time, and they're finally getting it. Then we're adding stable rate borrow. So all the loans that we've talked about on Venus so far are variable rate. And the more the market moves, the more so does the borrow APY. So now people can get a stable rate when this is introduced. That should be a lot higher or a lot easier to manage, but it'll be also more expensive. So you're paying a premium to have a more stable borrow APY, but at least you have the certainty of knowing how much you have to pay for that loan over a long period. We're introducing bonds. So bonds have tons of use cases in and of themselves, right? It's a multi-trillion-dollar market. Governments, corporations, municipalities, all kinds of people use bonds. And the very first use case that we want to introduce for bonds is as another risk management lever to refinance any debt that the protocol might have. So we're really excited about that one because it opens the door up to more institutional utility. And then, of course, we're making leaps and bounds in risk management because most DeFi is only supported by one price feed oracle, right? So in DeFi and finance, you have to know the price of something. And that's what's made possible by a system called Chainlink, which is probably the most well-known decentralized oracle. But if I learned anything from working at a big bank, it's don't have a single point of failure. And so we've added support for multiple price feed oracles. Binance helped us with this because they've launched an oracle. We're also partnered with an oracle called Pith, which has helped us add more support. So now we're going to be supporting 3 oracles. We're the only DeFi app in the entire industry to support 3 robust decentralized price feed oracles in that way. So it's a massive step forward from us from a technical perspective and a risk management perspective. And then there's some improvements on the governance, but that's pretty much V4. It's got a lot of really important improvements in it, and really excited to be sharing it today with the whole Binance family here.
Wow, that's so much to unpack. So yeah, I guess for the viewers, there was so much information. We do have a recap at the end, some key points that Brad already mentioned. I guess a lot of you guys probably have a lot of questions that you guys want to delve deeper into, but I guess for the V4 that's rolling out, is there a timeline on when it's rolling out?
It's already started. So we launched the first part of the swap the other week, and each one of those things I mentioned is going to roll out pretty quickly across the next 30, 60 days.
Awesome. So you mentioned like there's going to be a DEX integration, so users don't have to go outside. If they don't have the tokens, they don't have to go to other swaps. They can directly swap on the Venus app, increasing the user experience. There's also the stablecoin VAI, VAI. I guess so. I also saw user's question regarding this. So, by the way, congrats to the user 159. You will be receiving the $25 of lock trail funds. Okay, this one. So MP07. Yeah. So the question is regarding the VI. Could you shed a bit more light on VI?
Yeah, so Vi is, like I said, our stable coin that you can mint directly on the protocol. This was originally one of the key points of difference for Venus against other lending protocols, is that you have this facility to mint stables. And so if you don't want to access stable coins by borrowing them and using your collateral posted in the form of BTC or BNB, you can mint directly by depositing your stable coin, your assets into the Vi minting facility in Venus protocol. And so the reason why a protocol like Venus would want to have its own stable coin is so that we add more ways for other institutions to bring in and collateralize real world assets. So you might imagine that, say, I'm a big bank. I've got a bunch of real estate that I want to post as collateral. They can provide an analysis of what the value is of that real estate. The community can do its own due diligence. In the future, you'll see credit oracles coming online that help to automate this and decentralize it. But once they do that and the community says, okay, you can post this collateral in the form of this real estate, it'll allow that institution to mint Vi against it. And so that's a pretty interesting pathway to bringing in real world assets. So stable coins like Vi will be a big part of the future of expanding the utility of DeFi.
Okay. So that's stablecoin is one of the main key points of the V4, right? So there was the DEX integration, stablecoin, and then the isolated markets. So a quick recap on isolated markets is risk management, risk sort of like installation. I don't know what's the word, but so yeah. Could you talk a bit more about the isolated markets?
Yeah, basically the punchline of isolated markets is adding safe support to bring online the long tail of assets into DeFi lending and borrowing.
Okay. So more supports for more assets, and that's currently not supported. And what's like the comparison like for isolated markets? Like if it's not isolated markets, what's the comparison?
Cross margin. So basically, in the way that Venus exists now and the other big lending protocols, all the assets are pooled together so that you can easily. The advantage of that is that it's more capitally efficient because you're posting one collateral and you can borrow any other asset. But in isolated lending, you'll only have the ability to post one stable coin, for example, and borrow that asset or vice versa.
Okay, got it. And I see we have a lot of also a lot of viewers from YouTube. So regarding the stablecoin, GR Police 99 asks, so why don't we use a BUSD stablecoin instead? Like, what's the like the biggest point of a lending protocol minting their own coin and not using the native or like the native coins, right? Whatever the native stablecoin is.
Yeah, so we do support BUSD. There's a BUSD market, and we want to continue having support for BUSD. BUSD is, I think, a really important kind of thought leader that I follow out there in DeFi. Said it is the safest stable coin out in the marketplace. It's got the most reserves behind it by far. The idea of adding support for Vi is we want to provide more means of growing the value of the protocol, right? So every time somebody mints Vi, the protocol earns revenue. It's like another revenue stream. Also provides that lever to bring real world assets online because people can easily mint Vi against those real world collaterals. So that's another important lever and use case for Vi, and there'll probably be a lot more as time goes on. So it's nice to have a choice, and it could be that, for example, in having choice, Vi one day might be cheaper to mint than BUSD, or vice versa. So usually more choice is better, especially when it comes to DeFi.
In terms of like the price, how to keep like price pegging, what is the mechanism, or is there like a backing stable coin, or is it like a algorithmic?
Yeah, so it's an algorithmic over collateralized stablecoin. So basically, you can post any collateral that Venus supports. You can use it to mint Vi.
Okay. Yeah.
And so let's take the example of BNB. BNB has a collateral factor of 80 or 0.8, which means that if you post 100 BNB, you can mint 80 Vi. And so the nice thing about Vi is also is that you can use a basket of collateral. It doesn't just have to be BNB. It can be any other asset too. And then the protocol will weight the collateral factors and allow you to mint the appropriate amount of stable coin.
Yeah, so yeah, like you mentioned, DAI is very similar to DAI, right? So the same mechanism is to make your DAO protocol.
Exactly.
Yeah. So let me see. I guess we are also almost to 10 o'clock. We'll pick one more question from the comments. So okay, so 393 asks, tell us more about, if you mentioned like you had a DAO, a community. Are there any ways that the viewers here that want to participate can participate and join the Venus team or any ambassador program?
Yeah. So the ambassador program at Venus is called Venus Stars, and they're the ones that are organizing all of these events in real life all over the globe on like every continent. And so if you want to join the Venus Stars program, first thing you can do is join our one of our communities, either on Discord or Telegram. Follow the Twitter, and there's probably, as a result of this AMA, I anticipate there's going to be a lot more interest. So I think there's going to be a form posted soon that helps people put their name in, throw their hat in, if they want to become part of the program. So yeah, follow, join one of the communities, one of the channels, and stay tuned for that, I would say.
Okay, I just saw a quick question that I'm also interested in. So is Venus planning on expanding to other protocols or other networks?
Yeah, that's a really good question. I get it asked a lot, and I would say absolutely yes. Probably you can expect us to go to another chain maybe in just a matter of weeks, because in our community survey, people said that they'd like to see Venus deploy to another chain. And so we're really following the lead of the community here. There's been a lot of input. At the end of the day, DeFi will be a multi-chain world, and being on more chains means having access to more opportunities, audiences, use cases, and being on more chains means just having more utility overall, right? So as soon as V4 gets shipped, I would say, which will be over the coming weeks, you can expect the deployments to begin. I'd really like to see Venus deploy on at least 4 chains in 2023.
Awesome. So if you want to get the latest updates, I guess you can either participate in the governance or go to the Venus and check out their latest proposals to get the latest news. But yeah, thanks so much, Brad, and thanks so much for the audience for posting so many quality questions. I think in today's session, I myself learned a lot. So this is my chance of recapping myself. So Brad, I will cover some of the key points that we did cover today. Feel free to jump in. I might cue you on some points that I'm not very clear on. And then, so we're going into the prize quiz session. Thanks again so much for the viewers and the fans that have submitted these quality questions. So the next section would be a prize quiz. In this prize quiz, we'll first go over, do a recap on the AMA, and then we'll have 5 to 6 questions, which is a multiple choice, which the questions this time is harder than than the past few AMAs. So pay attention to the recap. This is super important. And yeah, so for the people who participate in the prize quiz, you have to participate in Binance Live, by the way. So for the YouTube audience, feel free to jump onto Binance Live. I'll go over the key points for around 2 to 3 more minutes, so you have time to jump over. But yeah, so a quick background. So Venus is a supported asset on Simple Earn currently on our flexible product. So what is Simple Earn? A lot of people ask. Simple Earn is actually a rebranding of what was the Binance Savings and Binance Staking. So a lot of people know the brands Binance Savings and Staking, and I think Binance Savings really is like the centralized version of what Venus is. We sort of find people who want to lend money and find people who want to borrow money, and then I can't translate the English. And then find these people, find the needs, match the markets, and then so people who borrow or deposit tokens into savings, they can earn a certain yield, and then on the other side, people can get collateralize their assets and borrow these assets. But they have to pay a certain interest. So that's we rebranded that to flexible product for Simple Earn, and then for lock products, that was former for the former lock products is called the Binance Staking. Most of the staking products you'll see that is they are POS assets, so proof of stake assets. Proof of stake assets, you stake your assets if sort of Ethereum, BNB, Solana, DOT, any of these assets on chain. So we stake on your behalf, on Binance users' behalf, and then you can earn a yield for a certain duration by locking up your assets on Binance Simple Earns. But why we rebranded to Simple Earn? Simply because for the users, it's really the same thing, depositing tokens and then earning yields. So we sort of added one layer of abstraction. So users, they just need to choose the assets, choose the duration, whether they want flexible durations or locked durations, and then they can earn yields on their idle assets. But I think currently, so Venus, a lot of the flexible assets, they run out of quota, but tune in if you want to find other assets that you're interested in depositing, or for XVS fans, you can wait until Venus, the XVS tokens flexible products release more quota to get the flexible yields. So about Venus, so this is a news that was talking about the isolated markets in, I guess, in your V4 rollout, right? So Venus is, like I mentioned, a lending borrowing protocol on a decentralized lending borrowing protocol on the blockchain. So regarding the isolated markets, I guess I wasn't very. My takeaway is that most of the assets that are currently supported on Venus is major assets, right? And in order to get and they're cross margin. Understand? Yeah. So like for example, does that mean like I can cross margin, meaning that I can collateralize A asset and then loan B asset, or or collateralize a lot of different assets and loan different assets? Could you jump in for a quick explanation on cross margin?
Yeah. So the easiest way to think about it is that the pools where assets are being loaned and borrowed and isolated, they're just mini pools, and you're only putting in a very small selection of assets rather than like 20, right? Which you could if you wanted to, but then that defeats the purpose of it being risk managed more conservatively. So with isolated markets, it's the same concept. You have a pool. It's isolated from the rest of the pool, from the common pool, where you're trying to keep only the safest assets, the ones that have the most liquidity, the ones that have the biggest market cap. You don't want to mix those coins with the ones that are more volatile, right? You want to preserve the safety, and you want to manage the risk separately. So that's why we say isolated.
Okay. Yeah. So the key takeaway here is the isolated markets is for Venus to be able to provide or offer long tail crypto assets, or sort of like non-major crypto assets that by segregating the risk into defined pools. So something to keep in mind for the questions. Next is, okay, so stable rates. I guess this is something that hasn't been rolled out yet, but Currently, all of the products on Venus is fluctuating rates, right? Flexible fluctuating rates. So for either the loaners or the borrowers, the rates will fluctuate depending on the market demand. In the future, for a stable rate, borrowers, they can pay a premium. So they'll get a higher borrowing rate, but then they'll be promised, or they'll guarantee that they can get the loan at this stable rate for the duration of the loan. So sort of like a futures where they can sort of lock in the and provide a clear view of forward cash flows. I guess that's a great description. All right, next, the DEX integration. This has already been has already been rolled out, or?
Yeah, so the very first step has been rolled out. People can go to the swap page section of the Venus protocol, but the full functionality is still on the way. So that's where people will be able to do one-click borrow and repay. But in the meantime, we've implemented a swap page, so people can more easily do swap right there within Venus.
Yeah, so making the user experience better so they don't need to jump to another swap if they're missing the token that they want.
Exactly.
And then the next point is the additional price feeds. This is to make Venus's price as stable and as reliable as possible. So you mentioned there are 3 oracles currently. Binance is one of them. So that with more price oracles, there's no single point of failure. So in terms of like Venus calculating the margin calls for the loans, it will definitely depend on these price oracles. So if something goes wrong with one, there might be cases where the users are wrongly sort of margin called or liquidated. Whereas with additional price feeds, that lowers that risk. And really also improves the user experience in terms of getting liquidated. All right, Brad, anything else you want to add regarding the top points?
I think you did a great job, Larry. Thanks so much for going through V4 in detail. I think probably everybody's going to come out of V4 Venus protocol expert, especially on V4 after this. So yeah, that's awesome.
Thanks so much for the great great presentation. No, sorry, the great speech. Learned a lot today myself. So yeah, so this is a great. The next part will be to test all of our viewers' knowledge on the rollout of V4 for Venus protocol. So so the answer needs to be in the form of, so for example, for this answer for this question, which of the following is wrong about Simpor? And this is not the official question. This is an example question. So if the answer is B, you have to write 1 dot and then the question and then B. Exactly in this form. We will only filter out this answer. So please answer in this form and log into Binance Live. You have to be logged in onto Binance Live in order to participate in the prize quiz. All right, you guys ready for the first question? Okay. So 1, what is the core business of the Venus protocol? A, is Venus a DEX, or B, is it a bridge, or C, is it a crypto borrow lend protocol? If you don't get this correct, I guess you're not going to be eligible. All right, wait for the answers to come in. Okay, we'll see a variety of different answers. Okay. All right, so answer stop. The correct answer is C. So what is the core business of it? Is a borrow lend protocol. So even though we mentioned that Venus is integrating a DEX, it's not a DEX. It's not becoming a DEX. It's because they want to provide a easier experience for users. If they want to borrow or collateralize a certain token, for example, or asset that they don't currently have in wallet, they can directly swap those tokens with other assets within the Venus app. All right. Second question. What are isolated markets? So A is isolated markets to lock others out of your markets, or is isolated markets segregate crypto assets into risk pools, or C, isolate market focus in single assets. So this one is a bit more tricky, but I think we did spend a lot of time today talking about this because I guess I wasn't very educated on this either. Okay, I see we still have a lot of experts who got this correct. So the correct answer is B. So in order to be eligible, you have to type 2 and then dot and then B. So isolated market segregate crypto assets into risk pools. So Venus can provide long tail crypto assets to their users and provide a more wider variety of assets. All right, question 3. Why would anyone use stable rate loans? So I guess the comparison there is currently all of the products are fluctuating rate. So we're getting answers for question 3. Not sure if it's my, okay, yeah, we are. Okay, cool. Next. So the correct answer is C, to gain certainty in future cash flows. So of course, a lot of users, they don't want that uncertainty of, especially like an example that we mentioned at the start, for example, probably someone borrowed BNB and then Binance suddenly launched a launchpad and then the BNB rates skyrocketed. In that case, I guess some of the users, they might want to look for stable rate loans where they pay a premium, but they fix their rate for the duration of their loans. All right, 4th question. What's the point of integrating a DEX? So A, so Venus can be an exchange, B, to improve user experience, or C, to drive away unwanted business. Okay. All right, so the correct answer is B. So I guess we also emphasize this a lot. With the DEX, users don't have to jump around if they are missing the asset that they want to collateralize or use on Venus. All right, I think this is the last question. So what's the point of adding additional price feeds? A, additional price feeds benefits the users, or B, to provide more choices, or C, it's mandated by law. Okay, remember to add the question, the number of the question at the start for your answer. So the correct answer here is A, additional price feeds benefits the users. So I think a quick trick answer is B. So no, it doesn't provide any more choices. It's just that additional price feeds can stabilize and prevent a single point of failure in terms of when Venus protocol is evaluating which price is the correct price or is the closest to the market price of a certain asset. So hopefully, Brad, I also got them correct. Please come out jump in if I misinterpreted any of those.
You nailed it.
Awesome. Thanks so much, Brad. So yeah, I think we're already 14 minutes past the hour. Sorry for dealing a bit on the AMA. Thank you so much, Brad. I've learned so much today, and thank you guys so much to the viewers for tuning in today. A lot of the users, again, they're asking about the rewards. It's not a crypto box. It's block trial funds. Go Google it on how it works. And please, if you have any feedback, feel free to scan this QR code. If you scan the QR codes, we'll match the UIDs with the chat. So please, if you have any feedback for the AMAs, you can submit it here. Thanks again, Brad. Anything else? Any last thoughts you want to add?
Just make sure everybody out there pays attention to DeFi. That's where the innovation's happening right now. And hopefully see you all in the Venus community on Telegram or Discord.
Yeah, do you want to tell them the handles?
It's Venus Protocol on Telegram. And my handle is on Twitter. It's Brad here now. It's Venus Protocol on Twitter. yeah, give us a follow and ask any questions. I'm always checking DMs, and I think our community people are there 24/7. So yeah, come hang out.
Awesome. Awesome. All right. Thank you, Brad. And thanks so much for the viewers today for tuning in. I think that's a wrap. See you guys.
Thanks, Larry.